Okay, good morning and welcome back everyone to our Tuesday morning market outlook session. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. Today is obviously a very important day for our country, our government, and obviously for investors who are currently exposed in the markets. So let's go ahead and get started because this is likely going to cause a bit of short-term volatility here for the markets, but we do want to look a bit beyond that, beyond the short-term volatility that we might see over the next few days and see what opportunities we currently have in the markets and where just generally markets stand. So let's go ahead and get started. Now, before we do, what we're going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So we'll start off by talking a little bit about our election and seasonality perspective. So looking at where we currently sit from an election perspective, as well as some of the good news that we currently do see from a seasonality perspective, which we have brought up here in the past. We know that September and October, generally speaking, are weak months going into election. We have seen that, and what we see for the rest of the year. We'll take a look at the major market updates or the major indices. They are sitting in fairly neutral territory here, which I think reflects a lot of investor sentiment right now in terms of being fairly neutral. Not quite sure whether they're ready to pull the trigger on a bullish view here yet, or whether they see some further downside. So markets, I think, reflecting a lot of the investor sentiment right now. We do want to take a look at commodities and rates because that is really where we have some potential movement. And a lot of the opportunities, in my opinion, actually come from commodities and rates at the current moment. And then we'll take a look at the current economic numbers and the ideas that we currently see, the limited ideas that we see going into the election. And then at the end, we'll open this up for Q&A if we have a few minutes here at the end. But the primary question I want to help investors answer is really how are markets currently positioned for the US elections heading into what is a very important day. So my name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And I want to share with you my charts that I'm currently viewing going into the election, the economic research, the research that we're currently watching from the US elections perspective, and the ideas that we currently have. So when we look at the polls clearly have continued to favor a Biden or Democratic win. But I will say over the past day, the polls have shifted quite a bit. This is the polls as of yesterday, but the polls have shifted quite a little bit over the last day in favor of a potential Trump victory. A lot of the polls a lot of the predictions or the betting markets have put a sizable gain here over the past day for a potential Trump victory. So that number, even though still favors Biden, has risen quite a bit in favor of Trump here over the last couple of days. But the Democratic sweep is still the highest probability. There is a slightly higher probability, in my opinion, over the past couple of days with respect to a Democratic House or a split government where Democrats have the House and the Senate remains control of the Republicans remain control of the Senate. So regardless of the outcome here, both outcomes, whether it's a Biden or Trump victory, in my opinion, long-term is positive for the markets. There are some concerns that Biden's Trump and regulation policies are going to put a damper on the markets. But as we've shown you in our election special, for those of you that are members, the correlation between S&P returns and higher taxes is actually surprisingly low. And if we look at markets over Democratic versus Republican administrations, there isn't both parties have performed fairly well. Democrats, the markets actually perform better under Democratic government. So the concern that a Biden victory will cause markets to fall is, in my opinion, false. So regardless, either outcome is likely going to long-term be positive for the markets, but short-term, a contested election, concerns about a peaceful transfer of power, those are the things that investors are truly concerned about, not necessarily the long-term view of the markets, in my opinion. So when we look at seasonality, specifically during an election year, September and October are weak months. They have relatively low probability of being positive months, and the average returns are both negative. And both September and October have not been particularly strong months. However, this is where November and December clearly become winners. Now, November isn't a big winner here. Only 56% of the time are positive, and it's positive by an average of 0.72%. Nothing to necessarily write home about, nothing huge, but December, this is really where we start seeing some pretty substantial numbers. 82% of the time during an election year, December is a positive month, and we see an average return of about 1.4% per 1.4% for the month of December. So a contested election likely going to cause some volatility, might cause some downside here to the downside. But as we head into December, where perhaps we have a clear sense for who the winner is and a peaceful transfer of power, or a clear decision as to who is the winner, that is likely going to cause a positive move here for the end of the year. So from a seasonality perspective, we're already past some of the rough points of the year, and we're likely to see some positive gains going into the end of the year. When we look at the broader markets here, the QQQ, this is what I'm saying, what I was saying before about markets are in this kind of neutral zone. We're in a neutral zone between major support and major resistance, 282 to the upside, 260 to the downside on QQQ. From my perspective, if we do get a clear winner here tonight, markets are likely going to respond positively and rally. If we do get a contested election, if we don't have a clear winner and there's some rhetoric around a lack of peaceful transfer of power, that is the catalyst that I potentially see could break below some major support levels and see some downside here. That is what investors are concerned about. This is part of why we have put on a hedge here for QQQ down to the 250 level here, which is about a 12% decline here from when we put it on, which is when it was just sitting above this 282 level here or so. We put on that hedge to hedge for this downside going into this 250 level here to the downside. We maintain that hedge, and we're going to hold on to that hedge through the election until we feel that there is a clear sense for a winner and that volatility has died down a little. So that is why we have that hedge on, is just as a protection, especially for many of you that are invested long, that have long exposure in the markets, whether it's in tech names or just broad-based exposure in the markets. This is why we think a hedge is prudent here for the markets. If we see a substantial volatility and markets start to decline even further, that's when we will roll down our puts to a lower strike price if we feel that we need to buy more protection here to the downside. So, but for now, we have, we put on that fairly inexpensive hedge that costs a little over 1% of your portfolio value to put on that hedge. We are looking to use that to roll that down if we do see some further volatility. If not, we'll simply close that out and take advantage of that hedge here over the next couple of days. When we look at the S&P 500, similar play here. The S&P 500 did bounce off the 323 lows here on Monday morning. On Friday. Similar thing. It's currently between this major support or resistance level between 323 and 342. If we do see a contested election and volatility or protesting and a lack of peaceful transfer of power, that is where we're likely to see some further downside. But a clear winner is likely going to resume and potentially break back above 342 and continue resuming its bullish market view here. That is our base view long term for the markets going into December and the beginning of next year, as markets remain fairly resilient, and some of the economic indicators that we're going to show you here in a few slides continue to point towards a fairly robust and strong recovery here in the markets. If we look at small caps has been fairly strong here. The recent breakout above 160 has failed to hold here at this level. It did break down, but this is one that we are waiting for the outcome of the election for IWM to break back above this 160 and resume its bullish trend here. It hasn't made a new low here. The new 142 lows was the last low here. So the fact that it continues to make higher lows is constructive for IWM. It continues to make higher lows each time it moves. This is constructive for IWM to continue moving higher here above that 160 level. When we look at RSP, this is the equal weight S&P 500 index, also continuing to make higher lows, trading into this triangle here. So what our expectation is that you might see continue converging into this triangle before you get a breakout here to the upside. But equal weight actually outperforming the market cap index. So if you look at the S&P 500, the equal weight index versus the S&P 500, actually outperforming. Not only to the upside, but also on downsides, not pulling back as much. So this is further evidence that markets are fairly resilient, that we are in a fairly good place from an equity markets perspective with some potential volatility or short-term volatility on the horizon due to the election. But once we have a result, regardless of the outcome, we do expect that resumption of this bullish trend to continue. We look at TLT. This is one where, you know, the breakdown below the 200-day moving average was something that Carter and Mike pointed out on Options Action, not last week, but the week before. They were looking at a short position on TLT. It did come back to retest that 200-day moving average as resistance and did get rejected, but could not make a new lower low. So from my perspective, this downside move so far has stalled a bit, but it is clearly still in this bearish down channel here. I am looking for a potential breakout here to the upside from TLT, but for now, our expectation is that TLT can continue to grind lower here to the downside when we look at a name like TLT or government bonds. And this really comes down to some of the movement that we've seen in 10-year yields, which we'll look at a chart here as well. I do want to point out gold here because commodities can give us some view into how markets are viewing stimulus, how markets are viewing rates. And gold sitting below this 180 level still maintains obviously more of a bearish view here. The breakdown below 180 so far has been rejected at the 180 level multiple times. So the question is whether gold will continue moving lower after getting rejected at 180, or can it break back above that 180 and move higher here? So in order to answer that question, I actually want to take a look at one other chart to help us determine where gold is going to go. But before we do that, we'll take a look at crude here real quick, because if we look at crude continues to trend to the downside, but it is in this downside channel here, you know, kind of trading around the 200-day moving average, going higher, going lower. So far it's going higher here, but crude is one of the stocks or one of the markets that is a little bit more sensitive to the outcome of the election, specifically energy stocks. Energy stocks under a Biden victory, unlikely to rally much, is likely going to see substantial continuation of its decline. And under Trump, from my perspective, we'll see a short-term bump, but is likely going to be short-lived because energy stocks have underperformed both under Republican and Democratic governments over the past 10 years or so. So this is one of the sectors that is likely going to continue to underperform regardless of what administration we have here due to the election. Now, when we look at Bitcoin here, one of the things about Bitcoin is that we've seen a major breakout here on Bitcoin. And the reason I'm bringing this up is to give us a better understanding potentially of where gold might be. Because as you can see, Bitcoin has had this major resistance level at 12,000 that it recently just broke out above, and has actually managed to sustain that despite multiple attempts to break above 12,000 that has failed. This time it actually has been able to sustain that and continue moving higher here. So this is a massive breakout here that puts Bitcoin potentially back into the range of 20,000, which is the peak that we just shy of the 20,000 peak that we had back here in the late 2017, early 2018. So this is one that we definitely want to pay attention to. From my perspective, a lot more upside here for Bitcoin potentially means a lot more upside here for gold. And this is really sensitive from my perspective to the stimulus. I think this is the markets, you know, responding to the fact that there's a higher likelihood of a Biden with the Democratic sweep, which means that we could have a fairly sizable stimulus bill coming in. That is obviously not a good thing for the US dollar. So this is really where Bitcoin and gold investors are kind of responding to this potential election outcome. So long term, especially with the Biden and Democratic sweep, this is one of the assets that I do see potentially rising towards that 20,000 level here. One that we don't talk about very often, but one I think is worth paying attention to, even if you're not trading Bitcoin, even if you're just concerned about where the election outcome is going to be, Bitcoin is one that I would pay attention to. When we look at 10-year yields, 10-year yields clearly on a long-term decline here since pretty much the mid 2018, but we've started to see rates no longer move any lower. So this is something that Carter brought up here on KRE this week. We had the breakout here above 80 basis points on the 10-year yield. It has held that 80 basis points and is now moving higher here. It broke out above the 200-day moving average here on the 10-year yield. This is one of the areas that we can see some movement here to the upside. Again, also related to stimulus. And one of the ways that Carter and Mike have pointed out to trade this is through KRE, this regional bank ETF that has a very high correlation to 10-year yields. Much better way to play this using KRE than XLF or any of the major banks, because the regional banks are most sensitive or highest correlated to these long-term interest rates. So using KRE, from my perspective, is a good vehicle to play for this move here to the upside here for 10-year yields. When we look at COVID-19 cases, this is one of the things that markets have become a little bit more sensitive to over the past couple of weeks. We've seen some weakness from markets as a result of this. We saw as cases continue to rise, equities came continuously under pressure, especially some of the reopening stocks like airlines, cruise lines, hotels really take a hit over the past couple of days. Even American Express continue to take some big hits here. But the one thing I will say, the silver lining is the fact that hospitals so far have managed this fairly well, where the number of rising deaths have not accelerated to the upside with the number of cases. But we do see historically that this does have a lag here between the peak in cases and the peak in deaths by roughly about anywhere between 14 to 21 days. And we are still in the growth stage here. This is still growing exponentially. That is the concern that markets currently have. And this is one external factor that also can put a damper here on the equity markets rally that is outside of the US elections. And this is one that I actually do think is fairly important, because Massachusetts just put into place a new curfew. Granted, it's only an overnight curfew, which should not have a lot of effect on businesses, but if other places start following, and Massachusetts is not by any means the worst growth in terms of COVID cases, it's the Midwest that we see the most growth. If some of those states go back into lockdown, especially during the day, or close businesses, as we have seen Europe put in place now, that is definitely going to put a cap here on markets rallies, even if we have a clear sense for an election winner. So this is one that we do want to pay attention to, because the acceleration in cases continues, and it continues to grow at an exponential pace at the moment. So not locking down states clearly having an effect here on the rising number of COVID cases. When we look at economic numbers, one that we continue to pay attention to quite a bit is really personal income and consumer expenditures, because a large amount of the growth in our rebound, if you will, comes from consumer spending. So this is really where we continue to see a fair amount of strength here. Consumer consumption expenditures coming out better than expected. Personal income also coming out better than expected. So this is really where we continue to see consumer stocks, staple stocks, home builder stocks. These are the types of stocks that continue to perform well. Wayfair, which is my trade from last week on CNBC, is the type of stock that continues to benefit from this type of consumer spending. And at the intersection of e-commerce and home builders and and home improvement stocks, this is really where we want to focus on. Even stocks like Overstock.com, any of the home builder stocks, these are ones where we continue to see further strength here to the upside. So this is where we see some of the rare opportunities for continued upside, not in tech, but in some of the less sexy, if you will, consumer discretionary stocks here in the markets, especially if you look at consumer stocks that are focused more on the home rather than some of the consumer discretionary names for reopening trades, if you will, like restaurants and travel stocks. Now, if we look at opportunities here in the market, this is really where you want to take a bit of a grain of salt, because again, over the next few days, we could see some massive volatility. That's a potential. That's not saying that we are going to, but there's the potential for some massive volatility. So from my perspective, I would wait at least till tomorrow, perhaps the day after, before I pull the trigger on some of these stocks, just to see whether or not we do have some substantial volatility over the next couple of days, which is, again, very possible. But one place that we have seen some substantial gains from a relative strength perspective is emerging markets. And emerging markets, obviously less sensitive to US elections, is one of the places that I'm paying attention to. EEM on the verge of a massive breakout here around this $46 resistance level here. So as you can see, massive resistance and plenty of upside all the way into this $52 range here on EEM. So EEM currently outperforming the US equity markets. We have not seen emerging markets outperform the US equity markets for some time now. So the fact that you have that outperformance is likely going to be a net positive for a potential breakout here. So watch EEM for that breakout above 46 with that coupled with that strong relative strength. That's what I'm looking for a breakout here. When we look at Visa, I pointed out MasterCard before I went on break here last week. We saw that MasterCard was starting to deteriorate in terms of its trend. It started to deteriorate on a relative strength, and on earnings, we saw both MasterCard and Visa start to trade lower here. My expectation is that this is one of the stocks that's most sensitive to the outcome of the election, because Visa, MasterCard, American Express, extremely sensitive to stimulus hopes. And largely the decline that we've seen over the past couple of weeks before the earnings is due to the lack of stimulus or the lack of clarity on stimulus. And that's why we started to see that decline in relative strength, and we saw that move to the downside on earnings. From my perspective, a contested election that drags on is likely what's going to cause further downside here for Visa. So Visa coming back a little bit off that low, but from my perspective, more of an opportunity to look for short positions rather than a strong rebound. Once you have a clear sense for an outcome, and especially if you have a Biden with a Democratic sweep, that is the outcome that I would be looking for Visa and MasterCard to resume perhaps more of a range-bound motion rather than a resumption of that bullish market, because Visa would have to get back above this 207.5 and really closer to that 215 level for Visa to resume a bullish trend, which is a far cry away. So I think at best, you're going to see Visa be more range bound under a strong stimulus, but otherwise I think you might see further downside here for names like Visa and MasterCard, which were from a relative strength and a trend perspective have really deteriorated over the past couple of weeks. When we look at Johnson & Johnson, same thing, weakening relative strength here going into the past couple of weeks. Had a fairly decent earnings announcement and then kind of just continued to deteriorate to the downside. So both trend quality and relative strength has deteriorated, especially when you look at the vaccine news on Johnson & Johnson. The one thing that really sets Johnson & Johnson apart from most of the other vaccine providers is really the fact from a logistics perspective. If you look at Johnson & Johnson's vaccine, requires substantially colder storage from a logistics perspective to distribute their vaccine versus some of the other ones that use more traditional cold storage that you can put into a normal refrigerator. And many of the logistics companies have that type of cold storage, but Johnson & Johnson requires substantially colder storage, and not many, only really FedEx has the logistics in order to distribute that. So FedEx and UPS are already stretched to fairly thin because of e-commerce. So this is really one of the stocks that we see some substantial strains, if you will, not only from the development perspective, but also from a distribution perspective. So Johnson & Johnson on the verge, as you can see, the 200-week moving average, testing the 200-week moving average. If we see a break below that, potential further downside here, substantial downside in a name like Johnson & Johnson. Lastly, if you look at NEM, this is response to the rally that we've currently seen in gold, in industrial metals. If you look at Newmont Mining, seeing this breakout here on this wedge here to the downside is one of the potential bullish catalysts that we do see. especially if you believe in this rally here in gold, some of the mining stocks is one of the ways that can see potential upside here, especially mining stocks is really one of a leveraged way to play gold. So I would use options to play for upside here to limit your downside here, but both industrial and in precious metals, both seeing some decent upside here, some decent relative strength and some protection from the downside moves we've seen from equity markets over the past couple of weeks. So Newmont Mining breaking out to the upside, potential breakout candidate here, especially if you believe in gold and silver. So with that, that covers what I wanted to share with you here today. And again, just want to thank Lauren for taking the time out here this afternoon, specifically thanking our members for supporting us and allowing us to continue to do this. If you are not a member yet and you want to access our members only content, which we have quite a bit coming up here in the month of October to help you better navigate the markets post the election, please sign up using the link here on your screen at trade.optionsplay.com/member. And if you are not a member and you just want to sign up for a free trial, this would also allow you to attend our members only session. You can sign up for a free trial at optionsplay.com. Now, I do have a few minutes to answer a few questions. So if you have any questions, feel free to type them into the chat window and I'll try to spend a few minutes and answer some questions. But equity market's about to open up just a little bit higher from where we closed yesterday. So looks like markets are kind of just waiting a little bit going into the election. Robert, Jose, everyone, Kavor, thank you so much. Lisa, thank you so much. Raphael is asking GM going into earnings. GM is one of the stocks that I've continued to like. I've liked this since it was trading in that $30 broke out above the 200-day moving average. I've talked about this on CNBC about a month and a half ago. So I like GM going into earnings. I like the restructuring that they've done. I like the focus that they have on electric vehicles. So especially under a Biden victory and a Democratic sweep, where we have that a fairly strong case for green energy, I think GM is one of the auto stocks that is going to do fairly well under that type of administration. Comment on VIX. So VIX is fairly elevated here. I do expect potentially, especially under a contested election, that you have a short-term move here on VIX, but longer term, I expect that it's going to recover back into this 32-30 range here on VIX. What's your on Ant Group suspension? So Jake, I haven't had a good enough time to review that, so I don't really have a whole lot to add to that at the moment. I'm happy to take a look at that later, but I simply don't have them. My thoughts on Tandem Diabetics, I have no idea what stock that is. That's obviously a small cap biotech stock. So unfortunately, I can't follow all of those stocks. I try to follow all of the big cap stocks, but I don't have a comment on that. So Bank of America, sensitive to interest rates. But again, if you're looking to play the movement here on interest rates, use a KRE. Far better vehicle here for movements here in the banks rather than in any of the major banks like Bank of America, Citigroup, JPM. I much prefer using KRE as some of the reasons that we stated on CNBC on Friday. Your view on Amazon. So this is something that Amazon is just trading within this range around 3,000 and 3,500. I expect that it's going to stay in this range, and I'm looking for opportunities just like Wayfair, where when it trades near the bottom of that range, you look for an opportunity, and I would use options to limit your risk. Selling credit spreads are the way that I would play for a bounce here in Amazon. When would you exit out GLD? So I'm holding on to GLD. I believe that GLD will break back above this 180 level and continue going higher. The same, and I'm using Bitcoin as a good proxy for the potential breakout here. Gold is a little bit weighted down by the lack of rally here in equities. Bitcoin is not. So I think Bitcoin is providing us a little bit of a glimpse into where gold might actually break out, and I think gold will break out here to the upside. What are your thoughts about Zoom? I think Zoom is fairly fully valued here at this 450 level here. This weakness here, we talked about Zoom on CNBC a few weeks ago. I think there was a question about whether Zoom can continue moving higher. And I said that I think this is fully valued. I think the stock has gotten ahead of the fundamentals. And I don't think Zoom is a strong contender here going forward. I think Zoom has gone a little too far too fast. Okay, with that, looks like we're about to open here. So thank you so much, everyone, for taking your time out here this morning. Like I said, important day for our country, important day for the markets, important day for our government. So I really hope that we have a clean election, a peaceful transfer of power so that we can continue our normal operations here in the market. So thank you so much. Have a great trading day, and I'll see you guys here on Thursday.